Hello everyone, welcome back to our channel Brilliant Bankers. Today we have an exciting informative topic to delve into: International Financial Services Center, commonly known as the IFSC. In this video, we will explore everything you need to know about IFSC, its significance, regulations, and how it's shaping India's financial landscape, and also the gift city. Let's start. So, what is an IFSC? An International Financial Service Center is a designated area within a country that offers a favorable environment for financial services and transactions, which is on par with the international standards. These centers are crucial for fostering a conducive ecosystem for global financial activities. So, what are the services that are provided by IFSC? The International Financial Services Center in India offers a comprehensive range of financial services to cater to the need of the global investors and businesses. So let's go into these services in detail. They are the banking services, commercial banking, trade finance, and foreign exchange services. In commercial banking, IFSCs provide a wide array of banking services, including current and savings accounts, corporate accounts, and international money transfers. As for the trade finance, banks and IFSCs facilitate trade finance services such as the letter of credits, export and import financing, and export credit insurance, aiding international trade transactions. On the forex services, IFSC banks offers foreign exchange services allowing businesses and individuals to exchange currencies, manage the forex risks, and execute international transactions efficiently. It also provides insurance services like life insurance. IFSC has branches of leading life insurance companies offering various life insurance products tailored to the need of the international clients. On the side of the general insurance, it covers a wide range of offerings including the property insurance, liability insurance, and marine insurance, among others. It also provides reinsurance of things. What is reinsurance? It provides reinsurance services allowing insurance companies to mitigate risks by transferring a portion of the liabilities to reinsurers, ensuring the financial stability. Asset maintenance or asset management services. IFSC is a home to the mutual fund companies managing investment funds, catering to both retail and institutional investors. Portfolio management services. It offers portfolio management services or the PMS, where professional portfolio managers handle investments on the behalf of high net worth individuals and their institutions. Alternative investment. IFSC facilitates investment in alternative assets such as the real estates, the private equity, in the hedge funds and venture capitals, diversifying investment portfolios. How does it help in capital market services, equity and capital markets? It enables companies to raise capital through equity and debt instruments, including the IPOs, bonds, and debentures. By adhering to the international listing standards, the derivative trading, it allows in trading in different derivative instruments such as the futures and options, providing risk tools or risk management tools for the investors. The depository services, it provides depository services for holding and transferring securities in electronic form, ensuring a secure and efficient way to manage the investments. It also provides the fintech and technology services like the blockchain or the crypto services, the regtech services, the digital payment services. These services collectively make IFSC a financial hub or the hub for financial innovation and international collaboration, attracting businesses and investors from around the world. So, what is the scope of an IFSC? Well, in India, it has been proactive in establishing these centers to promote financial activities and attract foreign investments. The first IFSC in India was set up in 2015 in the name of the Gift City in Gujarat and started functioning on 5th December 2019. So, what does this Gift City mean? It is a Gujarat International Finance Tech City, which is a shining example of India's ambition to create a world class financial hub. It boasts of state of art infrastructure, streamlined regulatory framework, and a vibrant environment. IFSCs in India offer a wide array of financial services, including banking, insurance, capital market activities, and more, as discussed in the previous slide. They facilitate cross-border transactions, making them a magnet for multinational corporations, financial institutions, and investors. These centers house a diverse range of financial entities from banks and insurance companies to asset management firms and fintech startups. These diversifies ecosystem fosters innovation, collaboration, and healthy competition within the financial industry. The SEZ Act 2005 or the Special Economic Zone Act 2005. In this, the central government may subject to such guidelines or do subject to such guidelines as it was framed by the Reserve Bank and the Securities SCBI, the Securities Exchange Board of India, the IRDI, the Insurance Regulatory and Development Authority, and all other concerned authorities. There are some exemptions of the security tax transaction under Section 90 of the Finance Act of 2004. If any transaction on securities are entered into by non-residents through an international financial services center. So, what is the significance of an IFSC? It plays a pivotal role in attracting foreign investments, driving economic growth, and generating the employment opportunities by providing a conducive environment. It also encourages MNCs to establish their presence in India, thus significantly contributing to the nation's economic, like attracting foreign investments, boosting economic growth, fostering the innovation and expertise in India, promoting the international trade, diversifying financial services, facilitating offshore fund management, strengthening the capital market, and also supporting the startup. To go into detail, how does it attract foreign investment? It serves as a magnet for foreign direct investment by providing a robust and investor friendly environment. International companies are attracted to IFSCs due to its favorable policies, mainly the tax incentives and simplified regulations, encouraging them to establish their presence in India. By boosting the economic growth, by attracting foreign businesses and investments, IFSCs contribute significantly to India's economic growth and development. The economic activities within the IFSC create jobs, stimulate demand for goods and services, and also boost overall economic productivity. By fostering innovation and expertise, it attracts financial institutions, the fintech companies, and professionals from around the world. It also facilitates knowledge exchange, fosters innovation, and promotes the development of cutting edge financial products and services. It enhances India's global financial standing as well by elevating India's status in the global financial arena by providing a platform for international financial transactions. It strengthens India's position as a global financial hub, attracting attention from the investors and business worldwide. By promoting international trade, it simplifies and strengthens the trade process. It facilitates easier cross-border payments, trade financing, and currency exchange, making international trade operations more efficient. By diversifying the financial services, it offers a wide array of financial services such as banking, insurance, asset management, and the commodity trading. This diversification attracts a broad range of investors from institutional entities to individual traders, fostering a vibrant financial ecosystem in the IFS. How does it facilitate offshore fund management? It provides a platform for offshore fund management and encourages the establishment of mutual funds and alternative investment funds. It enables global investors to participate in India's growth story by investing in sectors that align with the country's economic goals. It also strengthens the capital market, as discussed earlier. It provides a seamless gateway for foreign investors to participate in Indian stock exchanges, enhancing liquidity and the depth in the market. It also supports the startups and also entrepreneurships. IFSC fosters a conducive environment for startups and entrepreneurs, allowing them to access international funding and also mentorship. It acts as a platform for startups to connect with global investors, fostering innovation and entrepreneurial spirit. It also helps in driving financial inclusions. The IFSC initiatives contribute to financial inclusion by encouraging the adoption of digital financial services. It supports the growth of fintech companies, leading to the development of innovative solutions and enhance financial access for individuals and businesses. So, in summary, the IFSC in India plays a pivotal role in attracting the foreign investments, driving economic growth, fostering innovation, enhancing India's global financial standing, and supporting diverse sectors of its economy. Its significance lies in creating a dynamic and competitive financial ecosystem that benefits both the domestic and the international stakeholders. So, what are the guidelines of an IBU, that is an International Financial Service Center banking unit? Setting up of an IBU by Indian banks involves a specific set of guidelines and regulatory procedures that are laid down by the Reserve Bank for its operation. So the guidelines of an IBU or for setting up of an IBU are the eligibility. Commercial banks, both Indian and foreign banks, are eligible to set up an IBU in IFSC. Existing branches of Indian banks in the IFSC can be converted to an IBU subject to the regulatory approval from the Reserve Bank of India. How is licensing done? Eligible banks interested in setting up of an IBU will require to obtain a prior permission from the RBI, and it will be treated at par with the foreign branches of an Indian bank. Again, coming to the capital requirements of an IBU. The capital requirements, there are specific capital adequacy requirements for setting up of an IBU. Like the parent bank of the bank which is going to set up or which have asked for the permission to set up a branch. In that condition, the parent bank is to provide a minimum capital of US dollars 20 million or equivalent in the foreign currency as prescribed by the Reserve Bank of India. The capital requirements may vary based on the activities the IBU intends to undertake. What are the reserve requirements of the IBU? In this case, the IBU is exempt from all the reserve requirements like the CRR and the SLR requirement, as it is considered as foreign branch of an Indian bank. It is not considered as a domestic branch. The resources and deployment. Funds will be raised by the Indian banks and deployment can be done with both person resident in India as well as person resident outside India. But the deployment of funds with persons resident in India shall be as per or subject to the Foreign Exchange Management Act provisions. So, any deployment to persons or from persons in India are subject to the Foreign Exchange Management Act. On the operational aspects concept, there will be no cash transactions and SBI accounts are not permitted. But any person having an account in the IBU can maintain a current account or a term deposit with all the KYC norms as taken care of in India. All the KYC AML norms are to be as per mentioned by the RBI and as per all the other banks in India. So, what are the regulatory framework that has been formed by the Reserve Bank of India? The regulatory authorities, the regulatory framework of IFSC is governed by the several key authorities like the RBI, the SEBI, etc. RBI oversees banking and payment systems, while the SEBI regulates capital markets, securities, and the investment activities within the IFSC. There is also an IRDAI, which is looking after the insurance system also. So RBI, SEBI, and IRDAI. Applicability of Indian laws. Despite being a designated international financial hub, the IFSC operates under the Indian laws. There are certain relaxations and amendments are made to adapt to the international standards and attract foreign investment. The companies operating within an IFSC are subject to applicable Indian laws and regulations, ensuring compliance with the legal framework. What are the financial services and products regulatory framework? It offers a wide range of financial services and products, including banking, insurance, and asset management activities. Regulations are in place to enjoy or to attract these services, meet international standards, and provide a competitive edge, attracting global investors and institutions. What are the taxation policies? One of the most significant advantages of operating within the IFSC is a favorable tax regime. Businesses within the IFSC enjoy tax incentives and exemptions designed to attract international companies. The tax policies are carefully structured to promote foreign investments while ensuring compliance with international tax standards and treaties. The AML KYC regulations. IFSCs adhere to strict AML KYC regulations to prevent money laundering, terrorism financing, and other financial crimes. Financial institutions operating within the IFSC are required to implement AML KYC procedures to maintain the integrity of the financial system. Dispute resolution mechanism. It provides a structured dispute resolution mechanism to resolve disputes arising between the financial institutions, investors, and other stakeholders. This mechanism ensures fairness, transparency, and timely resolution of disputes, promoting investors' confidence and trust in the IFSC ecosystem. It also helps in collaboration with international regulatory bodies and corporate governance and reporting standards. So, what is this corporate governance and reporting standards? Companies operating within IFSCs are required to operate or adhere to high standards to corporate governance and reporting. Regular reporting and disclosure requirements are in place to maintain transparency and provide investors with accurate information about the financial health and performance of a company. So how does it help with the collaboration with international regulatory bodies? IFSC regulatory authorities collaborate with the international regulatory bodies and organizations to realign the regulatory framework with global best practices. These collaborations facilitate the exchange of information, promote regulatory harmonization, and enhance the credibility of IFSC on the international stage. So, in this, we can summarize that the regulatory framework of IFSC is a comprehensive system that encompasses various aspects such as legal compliance, taxation, AML measures, dispute resolution, and international collaboration. These regulations create a secure and conducive environment for global investors and businesses, positioning IFSC as a prominent international financial hub. With that, we come to an end to our video or session. Thank you for joining us today on this insightful journey through the India's International Financial Center and the Gift City. We hope this video has provided you with valuable insights into the financial powerhouses. If you found this video informative and engaging, please give us a thumbs up. And if you have any questions, comments, and or topics you would like to explore in the future videos, please feel free to leave them in the comment section below. Your feedback is invaluable to us. Stay tuned to the next video where we will be discussing about the technology in international banking. Do like, share, and subscribe our channel, The Brilliant Bankers. Until next time, it's Nishant signing off. Have a great day. Jai Hind.